There we are. And good morning, everyone. This is Marziti here, streaming on behalf of the Bullish Bears with our pre-market list. As you know, we have Price Producers Index coming in about 5 minutes. Yesterday's CPI move, which, while it did seem like a lot, was actually kind of muted. And as Signet talked about this morning in his briefing, there is still a lot of hedging going on with the market makers, indicating that they're still expecting some volatility. So let's kind of get some ideas of, well, where could this thing go? Where could we end up going? And the Price Producers Index is really not going to affect crude that much necessarily. ADRs are tighter, pivot points are wider, which means the goal lines, excuse me, the goal lines are further apart. Now, what that typically tells us then is that if we hit a pivot point, it means that the breakouts are less likely to continue. So it generally means that we will probably stay between, the white line is the pivot point. This solid green line is the first support. This solid red line up here, I know you can barely see it, is the first resistance. And so it generally tells us that we're probably going to stay at one of these two or in between them. No guarantees. IV is up here on the hourly. Tell you what, let's move on into the 15. I'd rather do that. IV is actually down on the 15. So it's gotten quiet. It is in a squeeze. It is stacked green on that 60-minute squeeze. It's also in a squeeze on the 15, indeterminate direction. Okay. So let's just kind of pull this down a little bit tighter so we can see. Again, notice we're just chopping along this pivot point. If we zoom back a little bit, yeah, we're just kind of stuck in the middle. Our target's high would be here at 76.26 if we have a break north. And just basically what we can see on the map right now, I can see this would be our first low target here at 74.52. So, there's some money in the trade, definitely some money in the trade. All right. ES, this is going to pop here in just a minute. But if we kind of back up, we went up. So our pivot points are tighter. That makes for really nice goals. IV is higher. So I like these two combinations. When I see that, I really do like it, because that tells me that moves to the pivot points up here at 58.46, down here at 58.13, those moves are more likely to happen. And then if we do hit it and cross over it, the move is more likely to stick. Let me take you into something right here. I want to show y'all. We'll start with this candle here. We talk about that trend lines are stronger with the more touch points. And so we see, all right, there's the PPI move. It was very high. PPI, Price Producers Index, basically saying what is the cost of manufacturing. Let me pop back here to read what that says. Let's go over and look at that real quick. I'm going to come back to that drawing there in just a second. PPI month over month 0.02, so that was in line. That was a little bit higher, saying that their costs were a little bit higher. Their costs are a little bit higher. Okay. So it said their costs were a little bit higher. Now, let's get back to this. Remember, you say, well, if costs are higher, shouldn't we be going south? No. The market makers, or not the institutions, have a move planned. They really don't care what the report says unless it's really far out of line. If it's close, they're going to go with their move regardless. And so they don't care if it's positive or negative. If it's in the ballpark, they're going to make their move. Now if you, pardon me one sec. Sorry about that. So the institutions have their move already planned if the report comes in anywhere in the ballpark. If the report, on the other hand, is way outside of the lines, then yes, they will trade according to the report. So this is the reason we tell people, stay out of the way of these kind of trades. We don't know where it's going to go. We simply don't know. And neither do the institutions necessarily. As you can see, we opened down here. We came way up here, so I don't remember which happened first. This does look overall pretty bullish. I was talking about this trend line right before the report hit. 1, 2, pretty close to 3, 4. That makes that a very strong trend line. 5. When we look at these kind of trend lines and we look for these types of breaks, remember, this is support right now, but the test of a trend line obviously is when it comes back down to it, and what does it do? So see, we can kind of see that there's a tiny little trend line right here. And let me just do it this way. Let me turn off these extensions. Left, off, right, off. Okay. All right. We see that little line right there. So price breaks. Price comes back and retests. And then price takes out these highs. So this is called, now Signet calls it a Busby, but this is called so we had this tiny little trend line here. This is called a break, retest, bounce. The long entry is when it breaks this candle right here. Now the challenge that we run into in some of these cases, though, is that would put our stop, that's basically 58.31, and our stop would have to go below this breaking candle. So I mean, that was 10-point stop. Of course, I'm on the 15. You see this exact same pattern on the 5, the 1, the 30-second, the 15-second, 5-second, and so on. So by going to a smaller time frame, you can you can definitely see. Now, you can find these ranges get smaller and smaller. Of course, that also means your profits get smaller too, but your risk is smaller. Some people will take this initial break right here. The challenge is you have to be prepared to take the heat, because this is not confirmed. If we look right here, that was not a confirmed break. It's not confirmed until first we have a close, so we did have a close, and then we have a break of that candle's high, or low if we're going short. Now that's called confirmation of, that's called a BRB, break, retest, bounce, or a Busby, as Signet calls it. Funny story about the Busby. You'll have to ask him sometimes if you don't know it, where he came up with the name. But anyway, as you can see, it did play out. If you'd have gotten along here, you would have seen here, and they say, well, where did it go? Let me get that in the screen a little bit better. And we look at, well, what were the targets? So let's just look left. This was the target, probably. Obviously, we can see, I'm just going to hover my mouse on top of that lastmost candle. You can see that we took out all these candles below, and we came up and matched this candle to the left right here. It looks like we matched it. So they found the liquidity that they were after in that area. We know that they found that liquidity because it's rolled back down at the moment. If they hadn't found the liquidity that they wanted, it would have continued to go up and up and up and up and up. So we've really got two things to learn here. Number one, the concept of the break, retest, bounce, or Busby, number one. And number two, targets. What were the targets of the move? Really, really muted move here. Again, 38, 23, so 15 points, blah, blah, boo. Okay. Nonetheless, implied volatility still a little bit higher. Pivot points are tighter. I'm still liking this. We'll look at that here closer in a minute. Let's take a quick look over at gold. ADR is tighter. That tells us, that the average daily range is tightening up. We have moved 68% already. Remember that the day is more than half over. We haven't reached, because the markets opened at 6 p.m. last night. We've already crossed 6 p.m. this morning. So we've already, the markets have already been open 12 hours. Well, 12, 13, 14 and a half hours. So gold obviously reacted with that PPI. Notice, let's go back over here and look at crude. Did crude react? Remember, crude is, while all these are global, but crude is really not tied to the reports as much as the others. We see that the ES moved, that we know the NASDAQ moved. If one moved, the other did. And we see that gold moved. Crude didn't, wasn't phased at all with this report. So if you're looking for a ticker that has movement, that is not as phased by some of these crazy reports, crude is a great place to go. As you can see, there's some good movement in crude. And so I like crude for that reason. Granted, it's kind of a weird concept, when you talk to people, well, I trade crude contracts. And they're like, huh? People just don't think about trading crude. But at any rate, okay. Obviously, the NASDAQ made this move. Notice where the NASDAQ went. It went to the pivot point. Let's compare that to the SPY. The SPY was already at its pivot point, so it went for liquidity, whereas the NQ, which there was liquidity here from these candles, so there was liquidity there, certainly. This would have been confluence, where you have multiple things agreeing. We have a pivot point, and we have liquidity. So one of the nice things we talk about, having multiple charts up, having the ES and the NQ up, to look at both of them at the same time, because we could have seen more than likely this target on if we'd have seen this target here on the NASDAQ, you could have, of course, taken the NQ trade, but you could have also taken, if you could have corresponded that over here, you could have taken the ES based on what you saw in the NASDAQ. Okay. So the yellow line here is SPY's close yesterday. As you can see, we're right around it. I really don't see a SPY trade here as far as the opening gap trade today. That could change in the next little bit, but right now I don't see it. The general market over consensus right now, as you see, I got ES, NASDAQ Russell, the VIX, the dollar, and then the bonds. Pivot points are tighter. IV is not going to be computed here because it's an amalgam. It's a combination of all these, and they obviously don't agree. It is in a squeeze on the daily. It's a squeeze, and it is, that squeeze does look bullish. We're in a squeeze on the 60 and the 15. The 15, though, looks bearish. That's interesting. So we can see that, we kind of say, well, maybe if it does, the squeeze fires, we maybe say it's going to go down. And then if the daily goes up at some point, it, may go back up. We'll just have to see. But we can kind of see we got those same moves that happened here as did in the others. One of the things, though, that I like to do when I'm day trading is I like to keep this chart up to see what the overall market is doing. Now, because I know that the ES and the NASDAQ are oftentimes, their charts are going to look very much like this chart. And so, again, by doing this here, you can compare. If you have the ES up, you have the NASDAQ up, NQ, and you have this up, you've kind of got a 2 out of 3, 3 out of 3 in idea of where the market is going. And I know that Kevin, for example, really big into divergences where, 2 are going one way and the third is going a different way. And then he starts looking for that opportunity based on that divergence. We can also look at, and I'm just going to override this for a moment, with putting the following in here. Apple plus Microsoft plus NVIDIA. Why these three? These three are the biggest three in common with both the ES and the NASDAQ. They're both position 1, 2, and 3 in the ES and the NASDAQ. Now, if you want to go to position 4, that's where they differ. But if you put these three up here, you're accounting for almost anywhere between 15 to 20%. Remember that the ES and the NASDAQ are not equal weights. The NASDAQ 100 has 100 stocks in it, actually 101, go figure. But anyway, we'll just say it's got 100. And the first thing you'd say is, well, each one counts for 1%. No, actually it doesn't. Apple counts for more than, Apple's about, I think, 8% of the total value of the NQ. Microsoft, 7 to 8%. And, so it's a little bit of a, it's a misunderstanding. A lot of people think that everything's equally weighted. No, they are not. So I call this my leaderboard. Kevin, for example, calls it his weighted indice, and he puts the multipliers and all that kind of stuff in. I don't see the need for it myself. That's fine. Tomato, tomato. But again, if you see that the ES or the NASDAQ is not following what these three, this amalgam, this combination of these three are doing, that tells you then that the, excuse me, that tells you that there's something not in alignment here. Pardon me one sec. Yeah. The cooler season's coming in and it's triggering my sinuses. I apologize. But so again, this is a divergence here because this is the top three of both the ES and the NQ. And so, well, if this was not doing the same as the NQ, for example, you'd say, well, what's going on? Well, that means the top three are pulling in a different direction than the other 97. And you have to ask yourself at that point, it's like, well, okay, what's going on? Now, ultimately, they'll come back into a line, but a lot of times these will be the ones that pull the overall market. Microsoft, Amazon, NVIDIA, Apple, these three combined will oftentimes pull the market and drag it where it wants them to go. So what do I like for a trade based on what I'm seeing today? We've got this fairly big move. What follows? Well, I mean, it's 15 points. Not really a big move. Not a big move. But we can expect to see some consolidation for a few moments following that move here on the ES, the NASDAQ, and very possibly gold, because the institutions have thrown their money at it. They either, maybe they got a base hit, maybe they got a home run, maybe they struck out, whatever. Their money is spent for the day, for the big move, unless they're planning another one for some reason. So that tells us, and the other thing too is that since this market did not run away in one direction and just keep going and going and going, they got to go back and reassess what their next move is going to be. So at this point here, a little bit of consolidation, probably until the market opens at 9:30. Then maybe they'll start making some more moves. We'll see. Let's take a look around the board. Crude is about as flat as it can be. The IV is higher on it. The pivot points are wider. But there definitely are some good trades in here. It will pick up at 9:30. For example, if we go back and we look at yesterday, we'll just call it right in here. You can see right here is 9:30. So we see that it chopped around some in pre-market, but it really didn't start making its big move until after regular market opens. So just because this is flatlining right here, right now, does not mean it's going to be that way the rest of the day. I'm really kind of liking crude if there's a setup there today. Right now, of course, it's just flatlined. ES, expect a little consolidation there for a while until after market opens. So let's go and take a look at what the averages. Let's pop over here to Edgeful and see what they have to say. So let's pop over to the futures. Let's pop over to the orb. Let's start with crude. Let's put in the regular trading hours. And finally, well, not finally, let's go to weekday and let's set this for the first 15 minutes. Let's see what we see there. So crude oil for the first 15 minutes, higher chance of a breakdown here on a Friday, but only 4-point difference between a double break. So there is obviously in the first 15. However, let's take a look at the first 30. Much greater probabilities here. So Friday's crude has a tendency to break down almost 50%. Not a statistical base of plan on it. You know, we like to see 70%. We like to see things 70% or higher. However, the odds are a little bit. What I'm more interested in seeing here is that the double break is very low. So if we do have a breakdown, the odds of the double break happening are much lower. So in that regard there, we can say, okay, that looks interesting. Let's take a look and see how that goes. Let's go take a look at the ES. Where are you? There you are. All right. On the 30-minute, let's start. Well, we'll do the same procedure here. Let's go look at the 5:15. Again, double breaks, very high. The Friday equal, practically it is equal. On breakout or breakdown, but let's take a look and see what happens if we move to the 30. Slight edge to a breakout. So again, if we get a breakout, we've only got a 42% chance of a breakout. If we do break out, though, there's only a 20% chance that it will double break. So remember with the orb strategy, though, that doesn't mean that it won't come back into the orb. It can still come back into the range. It just means it won't break the other side of the range. So we need to kind of keep that in mind. Lastly, we did look at gold. Let's throw that up here. What happens on Fridays? Let's go back to our 15. First of all, we want to kind of be consistent in the way we look at things. 50% chance of a double break. Very interesting there. Very, very interesting within the first 15. But if we go to the first 30, all right. Now, not as good as the others here. 34% chance of a breakout, but near a 25% chance that it will double break. So if I were trading gold based on the orb today, I would trade it based on scalping versus some of the other stuff that we looked at there. This is not the one that I would expect based on statistics. Now you can scalp it, you can trade. Another thing to realize too, though, if you have a breakout and you think it's going back inside the orb, so a breakout is breaking out to the north, going long. So if it does break out, but we've got a fairly large chance of a double break, if you think it's going to turn and go back inside the orb, not a bad short possibly, because it could go all the way to the other side of the opening range. So that's something to also kind of ponder in the back of our mind. Let's take a look. Now, one of the things to remember too, we can look at a lot of these statistics. We can talk about the Asian session and all that kind of stuff. But when we have a big report like we did right here with the ES gold and the NASDAQ with that PPI, Price Producers Index, that can throw statistics completely out the window because the sentiment based on the report or the trade can change the statistics. Remember, the statistics also traded in all the other Fridays for the last 6 months. And these reports don't necessarily come out on Friday. Sometimes there are certain reports that do come out on the same day every week, like crude has its inventories and so forth, but at any rate. So, again, we do have statistics. And we can certainly look at those and maybe kind of build a plan based on that. Again, like I said, also, if you want to try and get away from some of these news candles, crude is a great place to be because it's more global. You know, the ES and the Nasdaq are pretty much because of the stock holdings. That it's U.S. centric. It's United States centric. Crude is international, so one country's report is not necessarily going to change things. But the other thing about crude, though, it is sensitive to the international events. So as the Middle East conflict has heated up in the past, the price of oil starts to go up because oil is at risk. When Israel started talking about bombing the Iranian ports. Well, Iran exports all their oil or imports or whatever, all that kind of stuff. And there was a whole discussion about oil fields and all that. Well, the price of oil skyrocketed. All right. So that was a news event. So if you're going to follow something like crude, then you need to kind of follow the news events. One of the things that you can do, for example, though, let's see if I can do this very quickly. You can set, for example, here, any kind of a news aggregate. But let's just say over here in Thinkorswim, I were to change this to /CL. And there is news from Thinkorswim. You can also do USO, which is U.S. oil. You can actually do both, plus /CL. Now you pull the news from both sites, and you can watch that kind of stuff. And, of course, you're going to watch some of your big news sites like Market Watch, Bloomberg, whatever. All these have YouTube channels and stuff like that, just to kind of give you some ideas. Okay.